July 17, 2026. Today's briefing is less about short-term price movement and more about a clearer institutional signal. Traditional finance continues testing the rails around XRP and HBAR, even as markets trade lower. XRP is at $1.08, down 2.63%. HBAR is at 6.6 cents, down 2.50%. On XRP, the headline drawing the most attention is the reported launch of an XRP ETF tied to Rowe price. The immediate market reaction was softer price action, but the more important point is what this represents from a market structure perspective. When a major Wall Street brand enters the XRP conversation through an ETF wrapper, it changes access. It potentially gives institutions, advisors, and regulated capital pools a familiar vehicle for exposure without requiring direct custody of the asset itself. That does not automatically mean broad adoption of XRP for payments or settlement, but it does move XRP further into a framework traditional finance already understands: listed products, compliance review, portfolio allocation, and risk management. The second XRP development worth watching is the continued debate around legal classification. Coverage over the last 2 days has focused on the forces behind Ripple's courtroom progress and on the argument that XRP is being treated, in practical terms, more like a commodity unless regulators explicitly move otherwise. For institutions, that distinction matters because legal clarity affects everything from custody policy to Treasury treatment and product approvals. Add to that the report that DTCC is integrating XRP ledger gradually around tokenization and modernization, rather than making an all-or-nothing commitment, and the message is fairly clear. Serious infrastructure players are willing to explore utility where it fits operational goals. On HBAR, the strongest institutional story is Hedera's continued enterprise push through Utila integration. That matters because institutional adoption is rarely about retail visibility. It is about tooling, secure wallet infrastructure, governance controls, transaction policy, and operational access for Treasury teams and asset managers. If institutions can access Hedera through enterprise-grade providers, the network becomes easier to evaluate for real workflows such as token issuance, on-chain record-keeping, and controlled settlement environments. The second major HBAR development is policy visibility from the United Kingdom. Reports indicate Treasury has highlighted Hedera as a benchmark in the country's wholesale market tokenization efforts tied to a £33 billion modernization push. That is important because tokenization narratives become more credible when they move from industry discussion into government-linked financial reform. Hedera's council-led governance model has always been part of its institutional thesis, and this kind of policy reference supports the idea that regulated markets are looking for predictable, auditable, enterprise-oriented infrastructure. The broader signal today is that both networks are being discussed less as speculative assets and more as components in financial plumbing. For XRP, the focus is regulated product access, legal classification, and tokenization adjacency. For HBAR, it is enterprise integration, governance credibility, and wholesale market modernization. Neither story is about instant transformation. Both are about incremental fit with institutional requirements. The takeaway is straightforward. Price remains volatile, but the deeper story is infrastructure alignment. Watch where custody, tokenization, compliance, and policy attention continue to converge. Not financial advice, educational content only.